Hi everyone, I'm Mark Linty, your facilitator and moderator today. Before we start, I would like you to bring your attention to a legal disclaimer. Please note that the information shared today is for general education purposes only. It does not constitute legal or financial advice. An organisation should seek independent professional guidance for their specific circumstances. The views expressed are those of the speakers and not necessarily their organisation. I'll ask you to please familiarise yourself with the full disclaimer.
Thanks, Mark. And I just wanted to give everybody a bit of an intro into Mark. Mark will be moderating the session. Mark is an executive risk advisor and is an experienced global banking professional with strong experience in risk over the past 25 years. Mark continues to work in an independent risk advisory capacity and is an advocate for integrity within the finance industry. Good morning, Mark, and thank you for putting forward that disclaimer. We'll hand over now to you to officially walk us through the session.
Okay, in terms of the agenda, we'll open with why this matters, and this will demonstrate the importance of being compliant. Then we'll look at who is included, and we need to be clear who is covered by this and who is exempt. In terms of the regulatory landscape, what's coming and when, this contains significant information, and please pay clear attention to this. We'll ask what organisations should do now, and this will ask you how prepared are you at the current stage. The panel discussion and Q&A will allow as much time as we can for this. It's really important to ensure you're fully informed, and we'll ask you to hold any questions until that Q&A section, but we'll try and get through as many as we can, and we'll take away any unanswered questions and come back to you. And then the closing and key takeaways will ensure we've captured everything, including any of those outstanding questions. As you'll see from the agenda, there is a lot to cover in 1 hour across various agenda items, but I'll ensure we continue to move along through that agenda. Thank you. In terms of a time check, today's the 11th of December, and we're officially in that final sprint. We've got 202 days from the biggest shift in Australia's financial crime landscape in 20 years. Almost exactly 1 year ago, the AML CTF Amendment Act 2024 received royal assent. Since then, we've seen the draft rules tabled in August. Today is about moving from policy watching to operational readiness. AUSTRAC has provided much guidance on its website, and we encourage you to make yourselves acquainted with everything on that website. In terms of the panel today, we have Gillian Howard and Harsh Madan from H&M Enterprise Solutions and Manu Nagappa from Transition Solutions. Between them, they have considerable industry and regulatory experience to ensure your questions or concerns are answered. Without further delay, and given the coverage we've got to do, I'll pass over to Gillian. Thank you.
Thanks, Mark. Harsh will talk us through why this matters and then talk about some of the consequences as a result of non-compliance. And no further ado, I'll hand over to Harsh.
Thanks, Gillian, and welcome everyone. Why we are here and why this matter. It's just not a red tape. The legislation around AML CTF was long overdue. Australia is lagging behind among its global peers in terms of implementing the AML CTF legislation across the board. We've seen that while banks have incorporated decent controls in managing their AML CTF obligation, it's the other gatekeeper obligations around law, accounting, and real estate where there is still open doors which needs to be fixed. Australia loses around billions of dollars, around $100 billion a year, which equates to 3.2% of its GDP on serious and organized crime, and hence these regulations are long overdue. Just to give an idea quickly on the slide, how the AML or counter-terrorist funding works is the stage one is the placement, where the criminals try to inject illegal cash into the system. This can be either through depositing small amounts at the bank, buying real estate, buying vehicle or luxury goods, or investing into cash incentive businesses. The second stage is layering, where there's an effort to conceal the audit trail or the source of the fund, which is generally done through rapid transfer between accounts, converting money into assets, by buying crypto, buying gold, buying property, or using shell companies or trusts. And the final stage is the integration, where the money goes back to the criminal. It is generally done through sale of the property they purchased earlier, or the revenue generated from the business, investment dividends, and stuff. So yeah, this is the three stages of the money laundering and why we're here. The potential consequences of non-compliance is huge. AUSTRAC is an enforcement-led regulator. Penalties can be civil penalties, criminal penalties. There's individual liability for the directors, and there can be enforcement measures. Civil penalties can range corporation up to 100,000 penalty units, which equates to $33 million. So not a small amount. There is individual liability up to 20,000 penalty points, which could range up to $6 million. Again, not a small amount. There are criminal penalties for serious breaches, up to 2 to 10 years of imprisonment and/or fines, followed by enforcement measures. That's another way to look at it. There's an impact beyond. There's a reputational damage. There's operational disruption and regulatory scrutiny. So that's one need to be mindful of. Next slide, Jill. Jill, next slide, please. So who are the gatekeepers, and who is in and who is out? Where does it apply? At the moment, there is a certain profession that provide designated services and who have an Australian nexus are not exempt from this, and they need to comply with the new regulation. Designated services would be the services that are covered by Anti-Money Laundering and Counter-Terrorism Act. And if they operate in Australia, they are covered. For example, in the slide, real estate, if they are buying, the real estate agents are buying and selling property, holding money in the trust, they are covered by this act. And they are exempt if they are just leasing or doing a property management and not involved in the movement of cash. Similarly, for accountants, if you are managing your client money, setting up their trust in companies, or providing transaction enabling advice, then you are covered by this act. You are exempt if you are merely doing bookkeeping or tax returns and just providing advisory services. Conveyancer, again, if you have anything to do with property settlement that involves fund movement, you are covered and you're exempt. If you are just doing legal unrelated transaction work such as wills for your client, then you don't need to comply with that. I'll hand it over to Jillian.
Thanks, Harsh. Much appreciated. So we're going to move into the regulatory landscape. So what's coming? What does this all mean for us? Well, quite a bit, in fact. On the 10th of December 2024, the AML CTF Amendment Act for 2024 went through Parliament. And then in August 2025, the new AML CTF rules were tabled in Parliament. This brought about a significant change to the way that real estate agents and conveyancers and trust accountants are now incorporated into the Act. What is happening from the 31st of March 2026, all real estate agents, lawyers, accountants providing those designated services will need to register with AUSTRAC. And then from the 1st of July, that's when the legislation actually kicks in. And that's when you need to have all of the regulatory requirements in place, which we'll talk to in the next slide. So, right. So as I mentioned before, there are core obligations and there are key requirements. Some of the core obligations that we must meet are enrolment. So must register with AUSTRAC via the AUSTRAC online link. And when you first start providing a designated service, you must register with AUSTRAC within 28 days of first providing that service, as I said. Another core obligation is to have an AML CTF program. You must develop and maintain a tailored AML CTF program based on your organization's risk of money laundering, terrorism financing, and proliferation financing risks. And you must implement documented policies, procedures, systems, and controls proportionate to your business size and complexity. So having all of those controls in place to meet those individual obligations and key requirements that we'll talk about in a second. In terms of governance and oversight, you must maintain a governance and oversight approach. You must have a senior management or must have senior management approval of your AML CTF program. You must appoint a compliance officer, and you must conduct regular interviews or independent evaluation of your AML CTF program, because you need to really know that what you're doing is right and continuously improving where you might have some weaknesses in the internal controls surrounding these obligations. So the key requirements, they include know your customer and reporting suspicious matter. So know your customer is really about conducting customer due diligence and ongoing monitoring. So customer due diligence is made up of initial customer due diligence and ongoing due diligence. So as I mentioned before, when starting a designated or offering a designated service to a client or a customer, you must collect and verify their data. And you must collect their data. However, there are a few exceptions to this rule, and we can talk about them a bit later. And perhaps if there are any questions around that, we can cover those off. But for ongoing customer due diligence, you must monitor transactions, reassess risk profiles, and trigger enhanced due diligence if the risk escalates. And then there are a lot of people probably thinking about this, but in terms of pre-existing customers that are currently, are Tranche 2 entities, are transacting with Tranche 2 entities before 1 July, there's no need to conduct customer due diligence on them now or prior to or after 1 July, except if there is a suspicious matter reporting obligation that arises, or there is a significant relationship or business change, then you need to conduct your customer due diligence on those pre-existing customers, because then they're no longer pre-existing customers, and they just become customers that have had CDD. In terms of reporting and record keeping obligations, you must submit for suspicious matter reporting. We must submit suspicious matters if they're terrorism related within 24 hours. But for all other suspicious matters, they must be reported within 3 business days. In terms of transaction or threshold transaction reports, any transactions over $10,000 must be reported within 10 business days to the regulator. For cross-border movements of physical currency or bearer instruments greater than $10,000, these must be reported to customs within 5 business days. And for annual compliance reporting, this is providing an update to the regulator on how you comply with the AML CTF obligations. And then in terms of record retention, we must maintain programs and documents, customer due diligence evidence, transaction evidence, training logs of your staff. These must be recorded typically for 7 years to ensure that you maintain compliant with the Act. Right, I'll hand over to Manu Nagapa to talk about what's coming up and what's next.
Thank you. Hello, everybody. Okay. let's start with this big question. What should your firm be doing right now to get ready for the track to changes, right? As you see immediately, first and foremost, you should appoint an AML officer, AML compliance officer. This is the person who would own your compliance internally and act as your main contact with the regulators. That's fast track, right? Next, your team needs to understand what the new rules are. These changes are across the industries under, increased expectations, and we need to understand the customer checks and the ongoing monitoring that has to be done. During this period, we could also leverage to run a gap analysis, which is just a way of saying, compare what you have today with the new rules that is required. And this would help you spot areas where you are exposed and underprepared, right? And we can act accordingly. Between January to March, organizations should be building their AML CTF program and train their staff accordingly. This is about putting clear processes in place and making sure staff know what they have to look for. By March 31st, you should be preparing for OSTRAC registration, getting your documents ready, systems ready, and have your governance in place. And finally, the most important one is to have your technology ready. During the period of from now till June 2026, organizations should have actively been leveraging the technology. Reason being, manual processes simply won't scale under the Tranche 2 regulations. The key message that I want to bring in here is to start early, structure your approach, and don't underestimate the operational lift that comes through the Tranche 2 requirements. That brings us to our client lifecycle management, or the CLM. This is where most Tranche 2 compliance programs succeed, right? CLM covers every stage of your customer experience relationship, from onboarding till offboarding. At the onboarding stage, regulators expect you to have a robust identity verification, do the UBOs, which is your ultimate beneficial ownership checks, and have a risk profiling. This means you have to treat every single customer in a different way, and you're applying a genuine risk-based approach for every individual who is joining as a customer. Then comes the documentation management and verification, which is not about just collecting the IDs. It's also about ensuring that every single document that is collected is authentic, up to date, and securely stored in a way that it is easily retrievable during an audit from a OSTRAC or any regulator as such. The entire process needs a workflow automation, basically removing all the manual steps, emails, spreadsheets, and replacing them with a clear guided processes, which in turn reduces the mistakes or the manual errors and significantly saves a lot of time. Alongside with the requirements, it doesn't just stop on onboarding, right? You also have to perform ongoing monitoring. This means continuous monitoring or screening of your customers for sanctions, political exposed person checks, and adverse media, and also monitoring their behavioral aspects based on their transactions and customer activity, right? And lastly, everything must be supported by a strong audit trail and a reporting framework. Regulators want to see what is done by who did it, when they did it, why are the decisions made, right? You should have access and you should be able to backtrack every single steps that has been followed and showcase that we have a control over our activities to the regulators. The organizations that will succeed under Tranche 2 are the ones that treat CLM as a continuous process and not as a one-time activity. Jillian, if you could just move to the next slide. Yeah. So finally, I'm trying to bring all together here, right? What Tranche 2 really demands is one holistic end-to-end compliance solution. You're not looking at disconnected tools, not manual overloads, not manual workarounds. It looks at a single framework that connects KYC, KYB, documentation management, identity verification, workflow automation, and performing ongoing monitoring alongside with your transaction monitoring as well. When this is done well, there are big business benefits which will be achieved that leads to your teams working faster and more efficiently, less errors, less rework, easy integrations with your existing systems, and lower costs over time because you're not relying on heavily manual processes. The main takeaway for Tranche 2 isn't about just having this compliance in process and having those check boxes ticked. It's about an opportunity for us to modernize on how we can manage risk across your entire customer life cycle. That's pretty much about from me. Gillian, over to you.
Thank you. That's great, Manu, and certainly a lot that has to be done, and there's a lot that we can do to help our clients and understand and work through this whole process, because it's an enormous task. We've got my understanding is in the region of about 90 to 100,000 newly regulated entities in Australia that will come into being from the 1st of July. So it's quite a huge undertaking for Australia. It is the biggest change in this space in 20 years. So it is quite, and you're right, we can't underestimate what needs to be done here. And I think Transvision Solutions provides a comprehensive, complete view to meet those regulatory requirements. Right. We do have a question coming up from Sachin. Sachin, can I ask that you put a question into the Q&A if possible, and we'll come to the panel discussion shortly. Now, in fact. Right, so we are going to be taking questions now, and I might ask Sachin, if you're typing up a question, if you can drop that in, but we do have a few other questions that have come through for us, and then some of them I'll put to the panel. So in terms of legal professional privilege, one of the questions we got was, for lawyers, how do we balance reporting to AUSTRAC with client confidentiality? So Manu, is that something that you would, if you'd rather I take that question, I'm happy to do that.
Yeah, I can add on the confidentiality piece through our documentation management and stuff, but the legality, you could take it in.
So the Act preserves privilege, so legal privilege, but transactional data usually isn't privileged. Now, the guidance from AUSTRAC, and please do go look onto, go onto the AUSTRAC website, because they've got a phenomenal amount of information there. But they do state that information making up the grounds of suspicion in a suspicious matter report is subject to legal professional privilege, and if that is the case, you don't need to submit an SMR, or you shouldn't submit an SMR if a whole lot of information is under legal professional privilege. But AUSTRAC is developing a legal professional privilege form that you would accompany a suspicious matter report if part of your suspicious matter report is actually under legal professional privilege. So you can present some of the information under your suspicious matter report, but clarify that there is part of it that is under legal professional privilege. Okay. So I think we've got another question here. So Manu, I think this one's for you. If I file a suspicious matter report about a client, how do I continue acting for them without tipping them off?
Oh, sorry, Gillian, can you come back again? I was looking at the question that came in the Q&A. Sorry about that.
Okay, no, I will go into that one in a sec. So if I file a suspicious matter report about a client, how do I continue to act for them without tipping them off?
Oh, so it basically happens, you capture every details of the customer and the transactions that is done by those customer within the system itself, right? The system takes care of your PII of that particular customer and the transactional details. So you would do all the assessment. The system will trigger you on those activities, which breaches either thresholds or the criteria requirements that Jillian talked about. So there would be an alert that would be generated for you, which would then be escalated to OSTRAC, right? Everything happens within the system in a seamless matter and would be sent to OSTRAC. There won't be, any data leakage or any exposure to any individual or any client as such.
Yeah. And so you don't have to do anything. You don't have to investigate. There's nothing expected of you. Once you provide that suspicious matter report to OSTRAC, they will analyze that, taking into account a lot of other information that they've got. And then you just continue as you are, and no doubt they will come back to you and give you instructions on what to do, I'm assuming. However, if you do your customer due diligence and you're onboarding the customer and your customer has a high risk, which is outside your organization's risk appetite, and that's sort of the risk appetite is what you set for when you develop your AML CTF program. You would set you identify your risks as a business, identify what your risk appetite is as a business, and then once you've done the customer due diligence, the risk rating for the customer is outside that risk appetite, you don't proceed with that customer. That's not the same as tipping off. Tipping off is they are a customer and you've identified something that you're quite concerned about. That's when you notify the regulator. I'm assuming, Manu, this is an interesting one. If you're doing customer due diligence and you're suspicious, you don't. Yep. I'm assuming that's part of matter reporting, or you do you not? Do you just not onboard them? It's an interesting.
No, we don't onboard them. So the way it works is when you're onboarding a customer, right? We check for all the attributes, right? Whether it is in terms of the IDs that was given, or in terms of their presence in sanctions or watch lists or any other global watch list that is available, whether they are negatively exposed in the adverse in the media, and also if they are politically exposed, we look at the risk as well. So if they are in sanctions, you definitely should not be onboarding, so you would not be able to onboard. So we give you a flag saying that you are not allowed to onboard them. And even after, if your existing customers are already there who haven't been audited for sanctions and everything, and you find out that, you should be submitting a subject matter report for that. Right. Yeah. Because there are transactions that has happened. So then again, the system triggers it for you, and you don't have to do anything. System picks everything, system triggers the alerts on those, and you just have to, if we do the automated submission as well from your part. Only thing that we ask you is to just take a look at it and then go ahead and submit that to OSTRAC.
Okay, thanks, Manu. That's really insightful.
Gillian, I was just going to say, we've had a couple of questions come in, which I think we should take from the audience. The first, I think, is for Manu. Is Transition capable of real-time integration with PEP and adverse media, etc., providers like Dow Jones, WorldCheck, etc.?
Yes, we do that. So Sachin, it's exactly how Dow Jones or WorldCheck works, right? We cover all the sanctions, all the global standard sanctions. We cover about 300 plus global sanctions. We cover about 200 plus watch lists, which includes your Interpol's, FBI, all those things. Then we cover about 2 million plus PEPs globally. And adverse media is something, and all those things are done using AI and advanced analytics, because we don't give you a lot of hits as compared to some of the vendors that are available in the market. We give you very accurate results, and we ask you to set the thresholds high because our algorithms are very accurate, and we are patenting the algorithm as well. And when it comes to negative news, we only give you negative connotation ones. We run a lot of sentiment analysis and AI on the news to understand whether that news that has been presented to you has negative connotation or not. So yes, we do it on a real-time integration with APIs, or you want to use our platform, you could use our platform as well. You could do single search or bulk search as well.
Thanks, Manu. Any other question? Any other points from the panel?
Nothing for me. I think that was quite
Okay.
well, quite
Lovely. Thanks.
comprehensive, Manu.
Thanks, Manu.
Yeah, I think we got it covered. Sachin, if that answers, if you can give us a thumbs up, it would be helpful. Yeah.
Great. Whilst Sachin's focusing on that, we have another question. How fast will the authorities react once I report suspicious activity?
I can take that. Once you report suspicious activity, it goes into the Austrac intelligence system, where the data is analyzed along with other banks. Generally, you won't get a response immediately or a feedback immediately. However, if the data flags, if the intelligence system flags it as an instance of organized crime, or is there an indication of terrorist or counter-terrorism funding, then you might receive within 24 hours, you might hear back from Austrac. And the authority that can touch base with you would be could be federal police or border security, or whoever is looking, or which area does that impact.
Lovely. Thanks, Harsh. Any other points from the panel? In terms of questions, they're the only two that have been raised currently. I know, Gillian, you had a couple more that have been sent through early.
Yeah, I do. So there's one around conducting customer due diligence, and they ask, when am I required to conduct customer due diligence for a sale or purchase of a property? I guess I can take that. So customer due diligence must be conducted before a designated service is provided. So that's before the sale agreement. But I think that that does only apply to where you've got a normal sale, so doesn't account for auctions. So if you're presenting the vendor, and there's a sale that's been agreed, there are some parties to the sale, then you need to do your due diligence of both your vendor and the buyer before the sale agreement is, or before exchange of contracts, essentially. As for a sale at auction, you don't really know. You actually won't know who the buyer is until auction day. But you do know, if you're representing the vendor, you do know who the vendor is. So you conduct the vendor due diligence before entering into that designated service. And then the Act does allow for delayed due diligence, and allows you to conduct due diligence of the buyer within the earlier of 15 days after providing that designated service or settlement, and it's the earlier of those two dates. So one of the principles for that is that they don't want to interrupt the normal course of business. However, there are other requirements that need to be in place, but the important ones, they don't want to interrupt normal course of business, and therefore allow that, but don't allow you to delay due diligence just because it's not convenient for both yourself and the buyer if you're the seller. There's got to be specific and strict rules around using delayed due diligence.
Great. Thanks, Gillian. We've had a couple of more questions from the audience. In terms of the appointment of an AML officer, can we leverage existing compliance officer as the AML officer, or does it require additional investment?
I can take that. Austrac doesn't require a separate AML officer. It can be an existing compliance officer within the organization. It can even be a risk manager who's entitled with such responsibilities to comply, and has end-to-end process knowledge of the AML CTF, or the process within the business. As long as the person is suitably trained and knows the requirement of Austrac, it doesn't require a separate investment.
Yeah, and I can add to that, Harsh, that it could even be the principal. So you're a small business, you're the principal, you can't really afford to go and hire a compliance officer, as long as you are trained up and in terms of being that AML officer or MLRO, as as AUSTRAC refers, as long as you are capable and you are able to, then you can be the AML officer for your business.
Great, thanks, Gillian and Harsh. Next one, another one from Sachin. AUSTRAC has recently changed the schema for TTR and IFTI reporting. Is Transvision capable of reporting on version 2 specifications based on AUSTRAC guidance?
Yes, I think we would be able to do that, right? Based on the new regulations, new structure, we should be able to submit that to AUSTRAC.
Okay, thank you. And next, another question is, how will AML obligations affect sales processes and timelines for us?
That's an interesting one. Is it real estate sales processes, I'm assuming, is what we're talking about. So when you look at the sales process, you, according to the Act, before you provide a designated service, so that's before you sign the contracts with the client, that's when you're required to be doing your initial customer due diligence. Now, as I mentioned, there are occasions where you can have delayed due diligence, but there are only specific requirements for delayed due diligence. It can't be called because it's called for convenience. So that's sort of where it takes place in the sales process. It has to be before you enter into the sale agreement. Is there any context on that?
Just to add on to that, in terms of the technology, I mean, there aren't any delays. If you have the information available, like you have the document ready, you just submit that, we will do the screening and everything. It is all real time, right? It takes 10 to 15 minutes and you're all done. So technology is there to support, but yeah, the processes we have to adhere to.
And that's the thing, though, for the majority of the customer due diligence processes that you've got to take, the majority of them are going to be low risk. If you're in Australia, you're buying, you know, somebody's buying through a mortgage in Australia, that's going to be low. Likely there will be, it'll be a low risk customer, and those will be processed pretty quickly. And as Manu said, with the technology, it's minutes, and you know, as long as you've got that program up front, you've got your program in place, you understand your risk appetite, you understand the risk that you're taking, and you've done all your required due diligence. So you mentioned earlier, Manu, it's negative news, PEPs, so that's politically exposed persons, and what am I missing? Sanctions. So as long as you've done that, and then also, I suppose, just, you know, who is the customer? What are they about? Why, you know, are they paying cash? Those are all the things that when you look through you know, this transaction, is there anything in here that's really out of the ordinary? I mean, buying a property with cash, and the person clearly shouldn't be able to afford to buy a property with cash. Well, then, you know, that sort of sets off an alert and suspicions. But those are in the minority. The majority of your customer due diligence processes are going to be really quick.
That's
And
great.
as the ones, and when the sorry to interrupt, Mark, but when it is a high risk case, there's a reason. You know, you have to spend a little bit more time, because you can't take the risk of onboarding this customer, and they end up bringing a significant level of risk into your business, and that's sort of what you've got to avoid.
Oh, that's great. The questions continue to come, and this is great, because I think this is what the session was about. The next one, how should agents handle beneficial ownership checks when dealing with companies or trusts?
I can take that. Right. See, when it comes to entities, you know, we go to the parent organization who owns at least 50% or higher, or, you know, who has the controlling authority, right? When we are onboarding an entity, especially the UBO comes with entities. When you have a client as an entity, we try to capture the details of the shareholders, which it could be an individual or an entity, the directors, the role play of those directors, and everything. For trust, we go for directors, the other responsible, C-suite stakeholders and stuffs like that. So that would handle all the risks from a influence standpoint for that particular entity. The UBO checks specifically, we capture all the percentages and everything. We could also validate that through some of the solutions that are available in the market, which needs a API integration as such. But otherwise, you can capture all the information within the system, and we could do the checks manually.
Okay. The next question, and I know Harsh, you touched on this, is what are the penalties for non-compliance and how will AUSTRAC enforce them?
You're on mute, Harsh.
Sorry, yeah.
That happened once.
I think I mentioned earlier, there are civil penalties and there can be criminal penalties, and there can be individual liability for directors and senior officers within the organization. For corporations, civil penalties can range up to $33 million, which is equivalent to 100,000 penalty points. Individual liability for directors could be facing up to 20,000 penalty point, which equates to $6 million. And then the criminal penalty in terms of imprisonment or fines. There are enforcement measures as well, issuing of infringement notices. There could be a daily fine for administrative failures, and there could be enforceable undertaking requiring business to completely overhaul their AML CTF system or program if they, or even control if they don't have any, or if they are found to be lax as compared to best practices. There can be suspension or cancellation of the licenses if AUSTRAC finds the program is not in line with the best practices.
Great, thank you. There's another couple of questions. I'd just like to give a personal opinion on the back of Harsh's comment there. Having worked in financial services for more than 30 years around the world, a number of my posts have involved coming in when enforceable undertaking and fines have been inflicted on organisations, including two of Australia's leading banks. You really don't want yourself in this position. You're starting from -10. The secret to success is to be the shining example, be prepared, be compliant. Once you're in the eyes of the regulator, it's very difficult to get out of them. So 30 years of experience and it's supported most of my work, but I'd advise against getting in that situation. In terms of the next question, how does your transition platform handle multi-office or franchise structures? We have multiple real estate agencies franchises and our real estate agents are spread across the country.
I'll take that, yeah. So I think it totally depends on how we want it to be within the system, right? We support multi-tenant. So if you want that as one organization and capture agents beneath that, you could do that as well. Or if you want all the agents to be listed as different, and they capture their own customers, we could do that as well. So at the end, if you are one firm looking at all the various franchises and want to oversee as an umbrella organization, you should go for a multi-tenant option, which gives you an overarching view of all your franchises beneath that.
Okay, thank you. There's another question for Sachin. I'll read it out. There's quite a lot to it. What are all the types of risk assessments that need to be performed for the lawyers, accountants, and real estate agents, apart from the CDD risk assessments, trigger events, and ongoing monitoring? Are these segregated based on the type of business? Generally, enterprise-wide risk assessments include CRA, JRA, jurisdictional risk assessments, product risk assessments, and channel risk assessments for banks. So it's basically saying what are all the types of risk assessments required?
Right. I'll start on that, and then maybe Manu and Harsh can continue. So part of the AML CTF program is to understand the risk that your business has to money laundering, terrorism financing, and proliferation financing. So you've got to think about, you do have to segregate your customers and go, well, I've got customers that are located globally, so there are some geographical risks that you need to think about, and it might involve having an overarching view to your customers, your foreign customers, and having a risk rating that you identify for each of your customers based in foreign countries, and then that informs your risk assessment when you're onboarding that customer. So you know that if your customers come from certain countries where the appetite and the control of anti-money laundering and counterterrorism financing is weak, you know that there are potential risks there, bringing money in or cash in from those financial systems. Really having an enterprise-wide risk view is important. But I do understand that a lot of organizations, smaller organizations, don't really do this. The banks do have brilliant enterprise-wide risk management functions. Having an idea of what your risk in relation to money laundering and terrorism financing is very important, and how that might emerge across your business and across your sort of end-to-end value chain, essentially. And I'm using very risk kind of speak here, so I'll try not to do too much jargon. But yeah, I'm really having that view to where the risk emerges in your business. And you've mentioned a product risk assessment, channel risk assessment. Yes, that I'm if the risk around money laundering comes into your business through those avenues, it would be worthwhile having that represented in your AML CTF program. Is there anything else that I've left off there, Manu?
No, I just wanted to give one point of view here, right? In terms of the CRA or JRA, right, jurisdiction and all those things, you anyways would cover it because when you're doing a CDD, you look at the country of residence, country of citizenship, and all those things. So based on the fact of list of country risk, we would classify that as well, right? So indirectly or directly, you're covering that, right? And channel risks and product risk are mainly for banks because they have multiple products and multiple channels, which might not be the case with the lawyers, accountants, and realists, right? I mean, the mode of channel is very limited as compared to the complexity that is involved in banks. However, if you have an annual risk framework, which Jillian talked about, that should be good enough. I mean, it would also tell you at the end of the day how efficient your AML risk platform is.
Yeah, and say, adding to that, Manu, when we design an AML CTF program to suit a business, we take that configuration and put that into your client lifecycle management tool. So that we're recognizing this is the area, these are the type of clients that you have. So therefore, we're going to need to identify these kind of risk indicators or these kind of drivers when looking at an individual client and doing their customer due diligence and giving them a risk assessment at the end of that.
Exactly. And then we could help most of them in terms of what is the exposure that they have and how do we mitigate those risk exposures through various controls.
Yeah. And just to add on to that, there is also the sector-specific risk assessment that Austrac expects, especially for, say, for example, real estate agent. They would want you to risk assess your off-the-plan purchases for foreign buyers, cash deposits, and if there's somebody rapidly flipping their property, high-risk properties with luxuries and all that stuff. So for each of these tranche 2, they expect more sector-specific risk assessment along with an enterprise-wide.
Thank you. Now we have 3 more questions. We have around 10 minutes to go. So if we can get through these 3, hopefully that leaves enough time for you to wrap up. But first one is, can your software be integrated into existing CRM or property management systems without disrupting our workflows?
The answer is yes, right? We are a API-driven solution. We can connect to any system, any type of API, whether it is JSON. I know I'm talking technical. Yeah, REST APIs, JSON or SOAP APIs or anything, right? We are pretty open. We can connect and get data from any system, and we can connect to any system and pass the data as well, right? So
Great.
to and
Thank you.
fro, we can sit anywhere we want.
And I think another one for you, Manu, is does the system ensure compliance with the 7-year record keeping requirements?
Yes, it does. I mean, you just have to restrict it, right? I mean, you can have the documentation for any number of years you want, but it's we just have to set a standard that after 7 years you just dispose that. So that is done within the system itself. You would get an alert that particular customer documentation is about 7 years now. We have to let it go. If you're still an active customer, you can have it. If the customer if he is no more a customer and he's been onboarded, you cannot retain the documents for more than 7 years. That time we would let go the documentation.
Great. Thanks, Manu. The last question we have here is what sort of AML training is required for the agencies, and does your organisation support that training delivery as well?
So, Julian, yeah, go ahead.
So we can actually do it together because there'll be training to upskill our clients and customers on the regulations and the processes in building and managing an AML CTF program, and then we'll have training available and we do have training available from a technical perspective. So I'll hand over to Manu to talk through that.
So we typically do a workshop, right? Whenever we deploy a solution, we give you a workshop in terms of the user manuals. How do you access the solution? What are the user controls that you have to do in a workflow sort of a thing where we help you guide how to operate the system in itself. And in terms of the regulations, how we are addressing and all those things, we would be able to do that through a workshop.
That's great. We've just had one final one come in, and hopefully this could be answered and still allow you time, Gillian. Will you be able to share a summary of red flags for real estate agents to look at when onboarding new customers or during transaction monitoring?
We certainly can. We can look at the typical kinds of red flags that you'll be looking at, and you can certainly put that as part of your AML CTF program. So in terms of the things that you want to train your staff on, around things to look out for, we'll provide that information, and we can provide a list of some of those red flags after the meeting as well.
Great. Now, I'm sure I know you're going to do the wrap up there, Gillian and Harsh. We've answered all of those questions, but I'm sure we'll allow the attendees to subsequently ask questions. The importance, I think, here is everybody needs to be fully prepared. You need assistance. Make sure you don't get in the eyes of the regulator. But I'm sure the process of the questions already answered and future questions can be accommodated. But I'll hand over to yourselves for the closing.
Thank you. Thanks, Mark, and thanks for facilitating the session. To recap, if you provide a designated service, you are a reporting entity. So real estate, accounting, conveyancing, trust or company service providers, amongst others, are included, and it's the activity that matters, not the job title. So as long as you're doing the due diligence, doing the submitting suspicious matter reporting, complying with the obligations, that's what's important. So reporting entities must comply with all AML CTF obligations, and we spoke about those. So KYC, which is your customer due diligence, reporting, enrollment, having that AML CTF program, and then we mentioned record keeping, which is so important. Now, some of the key dates you must be aware of, and you must be enrolled by the deadlines. The enrollment opens on the 31st of March, 2026. You must be enrolled by the 1st of July, 2026. Now, for immediate action, visit the AUSTRAC website today. I can't stress that enough. Really get yourself across what's coming. AUSTRAC continuously update the website. They are providing some more information that they've committed to provide by the end of January. So please do keep up to date on there. You can do that by subscribing to their Tranche 2 updates as well. You can download some of the AUSTRAC preparation guidance that they've provided. And then begin planning your AML CTF readiness programs. Compliance is not just about avoiding fines, it protects your firm from being used by criminals, and it protects your reputation. So the earlier you prepare, the smoother your transition into tranche 2, and we're here to help you every step of the way. So just remember, compliance equals protection. It's not the policeman, it's protecting your business, protecting your reputation. It avoids fines, penalties, and regulatory action. It protects your business from being misused for criminal activity, and it safeguards your brand, which is so important. I think Mark mentioned earlier, once you've lost that, it's so hard to get it back, especially your brand with your customers, but also your brand with the regulator. So yeah, safeguard your brand, safeguard your license, safeguard your credibility. And if there's one call to action I can leave you with before close out, visit the Austrac website today, subscribe to Tranche 2 updates newsletter if you haven't already done that, and reach out to us. Our contact details are, so Harsh and myself, we are the co-founders and directors at H&M Enterprise Solutions. And here are our phone numbers, our email addresses. Reach out to us and we'd be happy to take your calls and support you on this journey. Thank you very much, everyone. And thanks, Mark, and the panel.
Thank you.
everyone.
Thanks, everyone.
Thank you.
Thanks for attending, everyone.
Yeah. Bye.
Thank you. Bye.